Hello and welcome to Business Today Television. A very happy Diwali to you all who are tuned in. With me today, my co-anchor Aba Bakai. I'm Siddharth Zarabi, and with us also Udayan Mukherjee, the global business editor of Business Today Television. Welcome to you as well. Udayan, it's a momentous day at Business Today Television. We are kicking off one more milestone in our journey of quality business news, views, and the best details that are possible about the stock market to our viewers. Great to have you with us. Abha, Samvat 2079, a year of hope in what seems to be a horizon with a lot of darks, Abha.
A year of hope, and you know what has always continued to promise us is excitement. There has been no dearth of excitement. Whichever may go, we've had the most extreme bouts of volatility, but we've come bouncing back. And the global picture may be looking a little grim, a little indecisive. There are just so many questions up in the air right now. And back home, the domestic story still has to hear about. In fact, I was reading some of those brokerage reports and Muhurat picks that are coming in. They're still expecting 25% upside coming in the next year. That is in no way looking pessimistic. Udayan, what are your thoughts and the kind of change that we've seen from last Samvat to this Samvat? The markets have made a strong move to try and claw that territory. How do you see, the new Samvat shaping up?
Well, first, happy Diwali to you and Siddhartha, and many congratulations on all that you're doing at Business Today TV, and I'm very glad to be a small part of it, and happy Diwali to all our viewers as well. But on a lighter note, I think the bigger Diwali celebrations might not be in Delhi, but London, where I'm sitting today, because one Mr. Rishi Sunak is on his way to becoming the next Prime Minister of Great Britain. So I think there could be a lot of fireworks here happening in London later this evening, and maybe even in Bengaluru around the household of one Mr. Narayan Murthy, because he's becoming the British Prime Minister. There seems very little doubt about it right now. So I think London will become the focal point of the Diwali celebrations much more than Delhi and Mumbai. On a more serious note, as you said, Abha, it's been a remarkable year. I've seen many years 20 where markets have gone up 40–50%. But I think this year stands out as the most remarkable performances for the Indian market. And I think, we've all talked about Nifty versus the Dow, but I was thinking of an analogy which puts this in context. Think of a year where you're feeling very down on Diwali day because you've not got an increment from your job. And then you look around and you find that all your friends are have either lost their jobs or are going through enormous turmoil in their personal lives. And all that you've not got is an increment. So, then you begin to feel that, I'm actually not doing too badly. I'm much better off than everybody around me. And then the lack of the increment seems a very trivial matter, a very small thing. And I think that's what the stock market has done today. We keep talking about wealth creation, but people forget that preservation of wealth is as important in that journey. And this year, what the Indian market has done is helped you preserve your wealth in a very, very difficult circumstance. Let me tell you, that's no mean feat. So I think it's a remarkable Diwali. I mean, we'll all say that it's a flat year from the markets and people have not made a lot of money. But the fact that in this global situation that you've not lost money is actually worth many years of making money in the market. So I take it as a great year gone by.
Udayan, what about the year coming by and the two biggest fears that seem to be haunting everybody when it comes to the macro of the markets? One is the age of inflation, and the second, that what we really in some ways could call a 30-year bull run. Some people are saying that's never going to come back, and inflation is going to now stay, and not for a few quarters but for years together.
These are difficult questions to answer, Siddhartha. I mean, much bigger minds are grappling with it and failing to come up with answers. I mean, the US, the Fed is panicking. All central banks will be chasing inflation, which is running away. And obviously, central banks have got it wrong in the year gone by. But these are trillion-dollar questions to which we don't have answers. I think the only way we can look at it, as investors sitting in India, if we start looking at the clouds on the horizon, the clouds are so many in number today that you will never be able to invest anything. I think it's much better to say, let the macro take care of itself. every time there is a global macro problem and markets get set back, we buy a little bit of the stories we understand back home in India and pray for the best. And in the medium term, we'll be okay. I cannot think of any better advice for investors on Diwali day today, because once you start talking about the things which can go wrong, the number of them are so many today that it'll turn out to be a very gloomy discussion on a festive day.
So let's talk about something cheerfuler there, and let's talk about some of the stocks that have really stood out this past year. What would be the multi-baggers in your mind? Of course, IT seems to top that list, and while we're on the verge or the cusp of a new year and a whole host of names that are looking very attractive at these levels, if we take a look at the year gone by, IT definitely is a pack that stands out. While a lot of market men seem to be saying it's time to exit or sell some of their holdings, on the other hand, some very, very strong buy calls coming in, particularly on the likes of an HCL Tech.
Abha, I think if you're talking about the winners, I would say that this is in a sense been the year of the underdog. Because, you look at the stories which have been forgotten in the last few years, last 5 or 7 years. What were those names? They were these names which were, I like to call them anti-ESG. The polluting Coal India, the cigarette company ITC. I mean, these were the stocks which were languishing for years, and they topped the charts this year from last Diwali to this Diwali. So, these underdogs have come back in a major way, and that really stands out for me in the year gone by. The other thing that I would say is a couple of groups have come to the fore. I mean, Adani is the easy one to talk about because all the stocks have been 2 baggers and 3 baggers, and it's not for the faint of heart. But you can't deny that this has been the year where Adani has put its stamp on the Indian stock market in a major way. Time will tell whether they can hold up this kind of performance or live up to this kind of a stock price performance. And I know that there are a lot of disbelievers, as many as believers, but you can't take away the price performance from them. And the other group which is really shown in the market this time around is the Mahindra and Mahindra group. I mean, you look at M&M as a stock over the last many years, it was just a typical muddling along kind of a name, stuck at 800 rupees perennially. But this year, that 40% jump in a flat market makes M&M stand out as a very interesting kind of a stock, because I think something they did, that capital raising on the electric vehicles front, that I think just sort of flipped a switch in the mind of the market or for investors, and M&M is a group which has really come to the fore. Also, the other thing I would point out, Abba, is that it's been a year where more than sectors, I think it's individual stocks within sectors which have done well. I mean, I'll give you an example of pharmaceuticals, where on one hand you've seen stocks like Cipla and Sun do so well, and on the other hand you look at names like Lupin and Natco and Ipca, they have languished. So, I mean, in autos it's the same thing. I mean, I spoke about M&M, TVS Motors has been a standout performer, but you look at some of the other names like Bajaj Auto or even Tata Motors, they've not done well at all. So, it's like a few stocks in some sectors have done well, and it's not been a kind of a top-down sectoral kind of a year in that sense. So I would say from a winning basket, a couple of those groups like Adani and M&M, some of these underdogs, a lot of the PSUs which were forgotten, and of course, a lot of intra-sector calls in individual stocks.
Good points there, Udayan. In fact, the point about the losers and how the hated pack of PSU stocks seems to have come back into favor. Who would have imagined Hindustan Aeronautics, for example? But taking that point forward, so what would you advise to those who actually believe that the markets are not a video game and are serious investors? What would you tell them in terms of how they should balance, rebalance, churn their portfolio, considering some of the losers that they may have in their portfolio?
Siddharth, the two I think which are hurting the most in portfolios, people's portfolios now, I would say IT. Abha was talking about it, but it's a year when the IT index is down 20%. And at the start of the year, I would imagine, I mean, I also believe that IT will actually do well, but then the war started and everything in the Western world became so cloudy that despite the move in the rupee, IT as a sector has done very poorly. I mean, Infosys and TCS are still fine, they're down 10% on the year, but you look at a Wipro down 40%, and that's been one of the howlers of the year. And you look at the entire mid-cap IT pack, which a lot of domestic investors own, that has been a serious letdown. So I think that's a big question mark on whether it's time to buy those stocks again, or these stocks will suffer more under the global gloom before they bottom out. And the other sector where there was a lot of hope at the start of the year, Siddharth, was real estate. Everybody was talking about a new real estate cycle in India after many years. So realty as a sector was expected to perform. But if you look at the BSE Realty Index, or you look at individual stocks, the stars like Godrej Properties, India Bulls Realty, etc., they're all down 30-40% on the year. So that story has not played out. So I would say IT and real estate have been two of the biggest disappointments of the year, and people need to do a lot of soul searching vectors. I mean, that aside, there have been some mini themes which have worked out. I mean, you look at divestment as a theme. BPCL has been one of the biggest dogs of the year. That's because the government just could not get it despite promises. And I think one of the biggest source of the year gone by has been the debacle of the LIC IPO, because stock's down more than 30% from its debut price. So these are some of the things that will stand out on what has been otherwise a very resilient year for the markets. And speaking of LIC, insurance as a sector has done very poorly. Even the hallowed HDFC Life Insurance has done so poorly this year. So that's another sector. You look at the Dr. Lal Path Labs and Metropolis Healthcare, those have been absolute howlers of 30-40% years. So I think there have been lots of pockets which have not done very well, where one needs to go and sift and see if they have reached attractive valuations. And of course, I'm not mentioning the Zomatos of the world, because all three of us, what kind of a year they have had.
Well then, while we talk about the year gone by, it really was a year where we saw retail investors continue to flock towards the market. And while we've talked about Indian equities remaining resilient, it was also a year where we continued to see a lot of interest coming in from an entirely new generation of investors looking to tap into this as an asset class. Savings were going towards equity markets. All other asset classes seem to be losing favor, so to speak. Do you feel this will continue to be the trend going forward, or what really stacks up the case for Indian equities versus other asset classes at this point?
No, you're right, Abha. I think it's the year where we look back and it was the year of coming of age of the Indian investor, because their mutual funds and Indian equities started a couple of years ago. But this is the year where they were tested. At many points, markets were down 10-15%, but they did not blink. Points, they slowed down a little bit, but then came right back into the market.
But then I'm just going to
absorbed 3.7 lakh crores. Sorry.
No, I was just actually going to just refer to the fact that the Muhurat session has also opened. So we continue our conversation. We're just alluding to the ticks, and at the BSE, some celebrity action. Ajay Devgan there.
and you can see this Sensex up, the Nifty up. Very clearly the standard Muhurat session starting, and we have all people decked up. This is after a break, Abha. COVID has meant that none of these things have happened for the last couple of years, but you can see the whole BSE auditorium full of people, not a mask in sight, thankfully, but the Muhurat session clearly seemed to be up, and we have the Sensex rates that are coming in up 663 points, the Nifty up almost 187, Abha.
It's looking good, and this is actually pretty strong for a Muhurat trading session. Nifty up 1%, 17,766 as you can see on your screen. We've got the Sensex also looking strong, and across the board the broader indices also, the Nifty Bank, I'm just taking a look at that, that's also in the green and up about 1.3%. That's a pretty strong opening for a Muhurat trading session, Udayan.
It is, and I'm not surprised, because the US market closing on Friday was very, very strong too. So we are in part reacting to that. I think because of the UK election results which are expected, there is some kind of sanity and calm in the European markets as well. But I think on Friday there was a lot of talk that the US market investors feel that for some data has come about that the pace of rate increases by the Fed will probably not be as much going forward. So we had a powerful 2% move out there, and I think part of this is the festive cheer, and part of it of course is reacting to the US markets. But as you've seen with many Muhurat sessions, I'm not expecting this to be the same, but they sometimes start strong and then there is a bit of profit taking towards the end, and they sort of end flattish. But today the global tidings are quite smart, so maybe we'll have a good session after all. And we are not, we're 17,700 on the Nifty. So another 300-400 points will be knocking on the doors of the recent high, not the all-time high of 18,600, but the recent high which was made a few weeks back before the correction started of around 18,100, 200. So I think that is the logical destination of this move over the next few sessions. With today's start, I would imagine that from last Diwali, the last Samvat session, where the market probably closed at something like 17,900, and today we are just 200 points short. So I don't even think we can call it a down year any longer. We probably just say it's flat. It's just 1% change between the two Samvat trading sessions.
That's just it. Markets continue to surprise, the kind of momentum that we have seen and continue to see. 5.9 on the Sensex, we've got 17,761 on the Nifty, and it's across the board now that we're seeing that spate of green. As Siddharth just said, a packed house when we're looking at the exchange and the opening bell, as everyone is out in full form this fair season. But then broader markets, this time around, do you feel there's going to be in to pick at? Because do you feel they'll be resilient in the face of any kind of ensuing volatility given the global backdrop?
It's tough to say, Abha. I mean, one can easily get carried away on a festive day and make some very good projections, and that would be a folly, because a lot of the challenges that we actually battled against and swam against this year continue to remain in place. Our valuations are quite lofty. I think earnings will hold the key. By this time next year when we are talking, I think we'll have a much better sense of whether earnings held up against the kind of a global slowdown. And I think the key risk to the market is that over the next couple of quarters, we find out that there are more earnings disappointments. And while the market can kind of scoff off the global doom and gloom and move to its own beat, if closer at home there are earnings disappointments, then I think this kind of a 20p multiple for the market will be very difficult to hold up. And I think that is a clear and present risk that we have to keep in mind. Your question is well taken on the broader market, because last time in 2018, when the market had become fairly narrow, you remember the time when nothing but an HDFC Bank or an Asian Paints would make money, everything else remained down or flat. I think we are not in that kind of a market over the last 1 year. Lots of mid caps and small caps have done well, though the small cap index is down quite a bit for the year. And I think earnings will hold the answer to whether we are in a new capex cycle, and we have started a new credit cycle from the banking space as well, and therefore mid caps and small caps will not fare that poorly. I think that is the most important question for most retail investors who don't buy only the Reliance and the Kotak banks of the world. They buy lots of stocks outside it, and I think I'm praying and hoping that it turns out to be the case. But it's not going to be an easy year to predict. That I'm quite sure about. There will be lots of twists and turns and a lot of surprises. So don't bet the house on a secular movement in the market. I think there is still a lot of volatility in store this year.
Udayan, what would be the triggers of volatility according to you? I just want to give you two contrasting pieces of data, which I'm sure you've seen while you were in London as well. One is the global inflation data, and you see country upon country, the OECD countries, kind of price pressures they are under, and that's obviously going to impact downstream with the interest rate hikes that are coming in. On the other hand, in the domestic market, data by the Trade Association, the Traders Association in India says that 2 days of Dhanteras, Abha and Udayan, there was business according to them, and sometimes their estimates are off the mark, 45,000 crore. We can always quibble about the numbers, but it's clear, and I've been out into the bazaars, they're chock-a-block. All manner of consumable items have been flying off the shelf. Everyone's been painting their homes, going out and buying vehicles. So it's like 2 years of pent-up demand also in travel. Can this story continue and withstand the global pressures? And a long question, but pre-2008, policymakers in Delhi used to tell me India has decoupled. Will they have the guts to say that again now as we head into 2023, Udayan?
No, those are dangerous words, and I'm always very, very cautious about using them very freely, because usually when people start talking about decoupling and stuff, that is when the markets give you such a whack that you don't utter it for a few years. So, I mean, this has happened in the past too many times for us to fall into that same trap again. Some things are different this time. I mean, it's not decoupling, but the fact that India, as I keep saying, I mean, it's probably the cleanest dirty shirt. You know, all shirts are dirty right now. India is probably the cleanest of the dirty shirts. And that's the right way to look at it. You know, maybe we have a demand story which is more powerful. And I think the other metric, I mean, you were talking about global inflation, Siddharth. The other thing is that if you look at the last 1 year, Diwali to Diwali, in the US, in Germany, in the UK, interest rates or the bond yields have gone up more than 250 basis points. That's a hell of a lot for a developed economy. In India, where we call ourselves developing, you know, our bond yields have only gone up about 120 basis points. So bond yields in India, curiously, have gone up by only half of what they have gone up in more developed and advanced economies. So that might belie a conviction that India's inflation problem is not as bad as the global inflation problem, and sooner or later it will start coming down. Again, time will tell whether we are correct in that hypothesis, but that seems to be what the street has priced in. On demand, I think everybody on the street agrees that these couple of months will be great, because as you said, there's a lot of pent up demand. It's what happens next quarter onwards. I think the worry is once you get into November, December, January, February, will the demand hold up? Or once this pent up demand is exhausted, we start to see some of the sluggishness come back because of higher inflation, higher interest rates, and the global issues. So we need to be monitoring the data very, very closely. India's case is not one of doom and gloom, but we cannot divorce ourselves completely from the environment that we are trading in.
So then one question which is everyone's favorite at this time of year is always, what's the expectation going forward into the new year in terms of levels to watch out for, or the kind of positive returns one can anticipate? Are you in line with the thinking that 20-25% is possible, or is that more specific stocks? If you're lucky, keep a reasonable expectation of maybe 12 to 15%. And you know, what are your expectations when it comes to the benchmarks?
My expectation is that the market will surprise us, Abha. I don't know which way, because right now everybody's expectation is that the next 3 to 4 months will be very volatile. When they say volatile, they probably mean that the market will correct. That's the sort of euphemism people use for a downbeat prediction on the market. They say the next 3-4 months will be volatile, and then things will start improving. So basically that means that people are waiting on sitting on cash. They're waiting for the markets to correct because of the global doom, which is when they will invest the money and deploy the cash, and then the markets will go up and reward. Markets usually have a habit of surprising. If that is the consensus, the markets might do the opposite. The markets might actually rally first and defy all expectations of a correction in the near term. And just when you begin to feel that behind you and we are off to the races, then the markets sort of earnings slowdown and a global inflation problem that is sometime next year, see a correction then. That would be more painful in my eyes, because then hopes would have dwindled and then the correction would have knocked you back. But I think these kind of surprises be amply expected over the course of the next few months, because we are in very, very uncertain. I mean, how can you stick your neck out and talk about a 25% return when there is raging in the world? And you know, it takes a switch of a button from a mad politician, change all your predictions of 20% return over the next year. So, you know, very unprecedented kind of terrain that we are living in, and therefore to make is going to be very difficult. As I said, the only thing to do is to change your time, not look for the next 1 year, but say what will happen in Diwali 3 years out, 5, and then it becomes probably a slightly better chance of success in predicting what lies ahead. That's exactly what the Indian investor that you spoke about seems to be doing. They're saying, okay, we take your notes of caution on board, but we are here for term, and we will take the volatility in our stride and keep getting invested in the market. So my Diwali thing is hats off to the maturity of the Indian investor, because I have not seen in the last 20 years this level of maturity from the Indian investor, and I hope their maturity pays off without them being brutally hurt over the course of the next 12 or 15 months because of some global problem.
Absolutely. Absolutely, Udayan, and thank you very much for those views.
If you like the video, do like, comment, share and subscribe.